This is the ABQ Business Podcast with your host, Jason Rigby. Each week we'll interview visionary business leaders to inspire the creative power and spirit that's in every entrepreneur. Discussing strengths, weaknesses, strategies, systems, and the problems we can all solve together for a new future for local small business.
Hey guys, how you doing? This is Jason Rigby with the Albuquerque Business Podcast. Today I have a very informative show. It's some people look at it as maybe not being exciting. I don't want you to go there. If you're a small business owner and you're worried about something that is happening, especially with the COVID-19 and your finances and your business and protecting yourself, this is going to be the show for you. I do have Sandia on the phone. She is a CPA. Sandia, can you introduce yourself and your firm?
Hi, Jason. My name is Sandia Jindal, and I want to formally introduce myself to everybody who's listening. I run a small firm. It's called the Jindal CPA Firm, and I've been in Albuquerque. I'm an ex-Sandian and started my business about 2 years ago. And my firm specializes in tax planning and outsourced CFO work. So basically more of the proactive planning, looking in the future and what we can do right now to make our business healthy and growing and the business of the future so that we can leave it to our children who will inherit the business. Instead of being a business owner, we convert those business owners into entrepreneurs because they're, again, looking into the future and not just sticking to the compliance work of maintaining their books and preparing their taxes, because that's money draining. So our firm teaches the business owners how to make money.
I love that.
In a nutshell.
And so everything that you have, it seems to be more, instead of reacting to what the government may put upon us or the laws that are changing, you're trying to be a little bit more proactive and then think legacy.
That is correct.
So I know, and you had sent over some discussions because I was like, I'm kind of familiar with this a little bit, but I know there's small businesses that are out there and they may have 2, 3, 5, 50, 100 employees, and they're going through this process of getting the loans and stuff like that. Can you kind of give an overview of the SBA loans and the CARES Act?
Yeah, most certainly. So the way I designed this preparation for the podcast is we'll talk a little bit about the SBA loans and the CARES Act that is out there. Most of the business owners are not even aware what their options are, and they kind of feel lost. And a lot of times when they hear a CPA talking, the CPAs are more interested in talking about the technical terms, which is way over business owners' heads. So we'll try to keep it in the layman's language, more of an overview, so that people can understand what their options are. And then we'll move into further discussion of what will happen if you don't qualify or don't receive the loan, because that is a huge possibility.
Right, exactly. So let's get like an overview of the SBA loan.
Yeah, certainly. So there is a CARES Act and the SBA loans, which is the 7A and 7B loan that was passed by the Congress. And the small businesses with less than 500 employees, as we know, drive the U.S. economy by providing jobs for over half of the nation's private workforce. So the Congress has come together to bring relief to America's suffering economy due to COVID-19 pandemic. And so now there's the only two loans at this time that we're going to talk about are the SBA 7A loan and the SBA 7B loan.
Okay.
SBA 7A is called the New Paycheck Protection Program, which is also called the PPP, aka Forgiveness Loan. SBA 7B is Economic Injury Disaster Loan. It's also called the EIDL loan, if people are aware about it. I just wanted to point out the similarities or the differences between the two, because people think that what is the major difference between these two loans. So let's talk about comparing both of them side by side so that people can understand what loan they need to apply for and what will they qualify for. So again, these two are for small businesses only, and the 7A loan comes with the loan forgiveness, which is at this time a huge deal for small business owners. However, the SBA's 7B loan, which is also the disaster relief loan, does not come with the forgiveness. Okay, so that's the major difference. Now, how are business owners eligible? What business owners are eligible for the 7A and who are eligible for the 7B? Let's talk about that. Now, there are businesses, nonprofits, self-employed, independent contractors, gig economy workers. These are all the business owners that are eligible to apply for a 7A loan, which is the payroll protection program, which is also a forgiveness loan program. However, businesses, sole proprietors, ESOPs, nonprofits, and independent contractors can apply for EIDL loans. Okay, it's also called the disaster relief loan. What are the loan terms for PPP versus EIDL? So the loan terms, according to the latest communication that came out, is 2 years for PPP, which is any of the amount that is not forgiven under the PPP loan has to be repaid back within the course of 2 years. And the interest that applies to the unforgivable loan is 1%. It's pretty good, but it's still 2 years, right? So that brings us to, we have to identify how to make most of our loans forgivable so that we don't have to worry about paying it back. However, the interest rate is pretty good, and if you think you're in the industry where your business can recover really fast, who is capable of giving out 1% rate of interest? Only SBA, right?
Right.
So that is still a great deal if you qualify for it. Now, there's a 6-month deferment period, which means that after you've been granted the loan and you are utilizing the loan for the next 8 weeks to pay your employees, and we'll go more in depth on how to make it forgivable. But the bottom line is that the payments do not start until after the 6 months of deferment on the loan term. So basically, you have 24 months plus 6 more months to pay any of the unforgivable amount under the PPP protection program at 1% rate of interest.
Okay.
Does it make sense?
Yes, that makes sense. And so if they're giving it to their employees for, for payroll, then that's forgivable, right? Because you said you're going to go into what's forgivable, what's not.
Yes, we will talk about that. And for sure, as the name suggests, it is meant for the business owners to support the employees and continue paying them. However, there's a lot more complication and planning involved in terms of how to make it forgivable. Just because you acquire the loan and you give it, pay your employees for that, does not simply make it, forgivable. We have to understand that there's newer communications coming out every single week because even the SBA did not have everything in written in terms of how to pursue these loans. And we'll get into the details shortly, but the loan terms for the SBA 7B, which is the EIDL loan, it is the payment terms are up to 30 years. We expect about 7 to 15 years. That will be normal for majority of the business owners. But the interest rate is 3.75% on the businesses and 2.75% on nonprofits.
Oh, okay.
It's still a pretty good loan amount. Now, it is good because it does not come with the restriction of applying it solely towards paying your employees. So if you have to pay your bills in a business, this would be a good loan to look at because it is 3.75% interest rate only. Again, nobody other than SBA can issue this kind of loan interest to the business owners. And then the the payment is between 7 to 15 years, and it can also go up to 30 years, depending on your situation. So it's a pretty good deal for the small business owners if they qualify for it.
Okay.
Now, did you have a question?
Oh, no, that's fine. I feel like you're fixing to go into it. So.
Yeah. So the deferment, again, for this one, the EIDL loan is 5 to 12 months. So if you have a current loan, there is a 6-month payment deferment. So if anybody has a current loan outstanding, then there will be a 6-month payment. So pretty much the same as a deferment period for PPP.
Oh, that makes sense.
There are different underwriting requirements. So basically for PPP, you don't need to prepare much. It's very simple, very easy processing, less paperwork. It processes really fast, and all you have to do is provide the proof that you have been in business as of 12/15/2020. And then you have to have less than 500 employees and should have a loan package with the letter. So there should be a loan package with the letter. And then no collateral is required to acquire this loan. So it's very fairly easy process. And however, on the 7B, it's more stringent requirements, more paperwork, slower processing. And, you have to show the proof of hardship. So there's no written communication on when you apply for these loans, what are the requirements. It's a 7-minute application that you can go on the SBA's website and apply for the EIDL loan. However, out of millions and millions of businesses that are applying, what makes you stand out is when you have some additional paperwork that goes out to the lenders, the SBA, so that they can see that there is a proof of hardship because of the COVID-19 situation. Right. So there should be projections. So all the business owners that are listening, this is the time when you need to know how important it is to have the right kind of CPA or an accountant in your team, because they should be able to put this together for you, like the projections, again, future facing, right, that we just talked about. Again, the business has to be in existence for more than 1 year to be able to even apply for this kind of loan. And the ability to repay, you should have a minimum of 640 credit score in order to be eligible for this kind of loan. One of the great things that I want to talk about here is that there is no personal guarantee under the PPP loan. However, you have to provide a personal guarantee, and if your loan amount exceeds $200,000 on the EIDL loan, then there has to be some kind of a collateral, which is like your property, residential or non-residential property, that has to go as collateral if you want anything above $200,000. So it is recommended that you keep your loan amount under $200,000 so that there is no collateral going towards paying off this loan.
No, that makes sense. And so we have these two loans with the SBA, and then we have the CARES Act. Is that part of?
Yeah. So CARES Act is Paycheck Protection Program, which is the 7A loan. That's CARES Act. Thanks for clarifying that. I guess I forgot to clarify this. The SBA 7B, which is the disaster relief loan, right? That is under the SBA. However, the PPP program is the newly issued CARES Act, and there's a difference on how you can apply for both of those. The PPP is applied through an approved lender, which could be your bank, right, local bank. And the SBA loan, the 7B loan, can be applied on the SBA's website, so that you don't have to go to the banker to apply for the EIDL loan.
So, yeah.
So, go ahead.
Oh, no, no, no. So like if because I had talked to a business owner the other day and they had applied for everything and they had like a big national bank and it was taking forever. And then they went to a small local bank here that they had dealt with. And it
Yeah,
literally they got everything done within a few days. And
exactly.
so are you seeing that or like
Yes,
as far as the process,
I
what if
was going to
somebody's
bring
out
that
there?
up.
Okay.
Yeah, I was going to bring that up just right now that it is worthwhile for you to go to a smaller bank, local area bank, because they're going to, and if, a lot of smaller banks are not going to take your application in unless you are the client or the customer of the bank.
Right.
So all you need to do is open up a bank account and you become the customer and now you can apply. So this is a little small strategy that you can utilize in order for you to go to a smaller bank and get approved. This loan, the EIDL loan that you apply for on the SBA's website, it has a $10,000, up to $10,000 grant that will be forgiven based on the number of employees you have. So I'll give you an example here. If Sam has an S corporation, he's the employee of the business, and he has two more employees in the business. So he will qualify for $3,000. So it's $1,000 per employee up to $10,000 max, which they can apply. And this is a grant money, which you as a business owner does not have to repay or pay them back because, again, it's a grant money, which will, according to the initial guidance, the promise was that it will be submitted in your bank account within 3 days of the application. However, it's not happening because of the influx of applications coming in. But um, it's very hopeful that you will get the grant within a few weeks, if not 3 days. And if you are a self-employed business owner and you do not have any employees and you do not have an S corporation and you're not the employee of your business, don't worry, you can still apply. The only amount that you will qualify for, though, is $1,000 because $1,000 for yourself as the person working in the business. So this is free money. So even if you're not going to take the EIDL loan, I strongly encourage everyone to apply because you can still get $1,000 or up to $10,000 of grants, which you do not have to worry about paying back.
And but the requirements are still the same, right? You have to be within business within a year.
Yeah, you have to be in business for a year before you can apply. That is correct.
Oh, okay. Yeah. So, and when you're looking at, like what are you seeing with business, some businesses that qualify, some that don't, cause I know there's probably a lot of confusion out there. So how would, cause I know like if somebody got a hold of you and we'll talk about your website and Facebook, how they can get a hold of you and schedule an appointment, but yeah, and I know that's what you do. You like eliminate a lot of the confusion, but like if they've tried this and they don't qualify or whatever, what's the best things that they can do?
Okay. So in order for, if they do not qualify, it's not the end of the world, but it's great if they qualify because again, PPP and EIDL are, again, if they're not forgivable, they will still be at the lowest rate that you can ever imagine. And that will be good enough for you to get your, things going in the business while we recover from this loss in the
Right.
economy. But if they do not qualify, now I want to bring up the statistics that the $349 billion that were funded in the first round of the PPP, only 5% of the business owners got funded and $349 billion were exhausted. So the next round that's coming in is $340 billion. And again, if we anticipate another 5% of the business owners getting funded, the PPP, there's still 90% of the business owners that will not receive these loan amounts, which is huge. 90% of the American business population will not receive these amounts. So let it sink in. However, there are ways we can still help you, or you can even go out and look out on your own. Are um, accessing any of the business credit and loans from other lenders. So only 20% of the total loans in America are sponsored or issued by the SBA. 80% come from other sources.
Right.
So there are lenders out there that will still be able to support you, and the requirements are very minimum. They do not need you to have any kind of a credit score. They do not need any guarantees. They do not need any collateral. However, and this is again a very general overview. It depends the application going in, and every person is different. But the company that I work with, they will go out and look out for the loans that you might be eligible for. So increasing your line of credit could be another um, way for you to receive some of the funds in the business. And for that, you need a business credit. And most
Right.
of the business owners do not even know that they need to apply for a business credit. So they're running their businesses off of personal credit, which is obviously it goes up to 850, right?
Right.
Business credit is something that goes from um, 0 to 100, and anything above 75 is considered to be a good business score. Um, so this is another topic another day for sure, but there are options out there in terms of receiving the loans. However, if you don't feel comfortable, what else can we do? So that's when the tax planning will come into play. So we'll talk a little bit about the important tax breaks from the CARES Act that came through, and they are the ones that are superseding the Tax Cut and Jobs Act that was issued out in 2018. Okay, so we'll talk a few of those. The number one is advanced tax credit. Everybody must have heard about the advanced tax credit. What exactly is it? It is the advanced tax credit that you will receive based on your 2020 tax return that you will file in April of 2021. However, it's called advance because you're receiving that money right now. As we are speaking, IRS is issuing these credits to the eligible individuals and um, families that will qualify for this. What is the qualifying requirement? If you are a single and your AGI, which is adjusted gross income, is less than $75,000 in a year, or if you are married filing jointly, your AGI is below $150,000 in a year, you will qualify for $1,200 for a single and $2,400 for married filing jointly as a tax credit that you do not have to pay back. And as of right now, they're saying it's going to be $1,200 a month multiplied by 4. For 4 months, you'll get this money and you don't have to repay it or pay it back. And if you have children, you'll get additional $500 for each child that is under the age of 16. Now, there's some tax planning that could be involved if you have a child over the age of 16 and they're still living at home and they may have a side job, but they cannot support themselves. They're not going to qualify for the $500. What you can do is have the child file his or her own taxes, and then they'll be qualifying for additional $1,200
Oh,
on
wow.
on themselves, right, on their own. So you don't have to worry about the $500 because they'll get the $1,200.
Oh, no, yeah, that makes sense.
Yeah, and this is amazing because this is an advanced tax credit. The maximum you will qualify for is $1,200 or $2,400 for married filing jointly. If your AGI exceeds $150,000, which is for married filing jointly, and it goes all the way up to $198,000. After $198,000, you do not qualify for any of this this tax credit. It's only between someone who has the income below 150, and then the tax credit will start phasing out as your income goes above 150, and it will completely fade after 198K as your AGI.
So if somebody
So
hasn't
tax
filed their
planning,
taxes now, if somebody hasn't filed their taxes now, does that mean that they should file them now because they're going to get if they meet this criteria, they're going to get the $1,200 for 4 months?
So if someone that hasn't filed their taxes, the first thing they need to do is look into their 2018 taxes that they filed and look at their AGI on the 1040 that you filed. And if your AGI is 150 or below that, you're good. Don't file your 2019 for right now until you receive your money,
Right.
because we don't want to confuse the IRS and them having to look at your 2019 now when they were getting ready to send you the check. So wait for the check to come in and then file your 2019. However, if your 2018 AGI is above the threshold that we just talked about, then you might want to look into filing for 2019 and see if your AGI will be below 150. So if your AGI will be below 150, then you'll qualify for more amount or the maximum that we just talked about.
Right.
So there's, again, a planning and strategy involved in identifying whether you should file for 2019 right now or should you wait and get your money based on your 2018 tax return. So that comparison is very important right here. Great question.
Yeah, and I think that and that's something where, like, you guys are an expert in that. You've gone through that. So before somebody files, they should, contact you, set an appointment or whatever, and then go over that process and then see, and then you can let them know what direction they should go in. So with the taxes, with the loans and all that, are you, is it better just so that, let's say there's a small business owner out there and they have 5 employees, and they own a small restaurant and they've been shut down for a month and a half, 2 months now. And they don't know what to do. They're just sitting at home, they're living off their money that they've had saved in their, in their bank. So let's say they call you and they want to come to you. Is there options, like, would you help them with the loans, or are you going to put them in the direction of a good banker, or like if somebody's, because I'm trying to always think, like, if somebody's listening right now, and I know a lot of restaurants and small business owners have had to let everyone go, what could they do, like, right now in their despair, in wondering what to do? Or maybe they went online and they got confused and they didn't know what to do. They called their bank and their bank's like, good luck, stand in line. If they came to you, what would you tell them, as far as hope goes?
Yeah, so if they come to us, we have a team completely dedicated towards getting the file and the supporting documents that will go towards filing for your loan application, so that you stand out, like I was talking about, having those projections ready for you and identifying what is the maximum PPP loan that you will qualify for, because it's based on the payroll cost. And when you go to the local banker, most of these people, if we know, they operate at $20 to $30 an hour wage. So they would not know specific guidelines on how to calculate the payroll cost. What does it mean to a small business owner is that they will qualify, if they put in the application, they will probably qualify for the lesser amount than if they come through us. We will be able to analyze what would be the appropriate payroll cost and how much of it can be forgiven. There is a specific way of getting this loan forgiven. The moment you receive your PPP money in your general fund or your business checking account, let's say today I received my $20,000 or $200,000 from the PPP and it got deposited in my business checking. Tomorrow I ended up getting a direct withdrawal from my bank account for the advertising cost that I paid for the month. What will happen is, if out of the $20,000 that I received, I paid $2,000 the next day out of my business checking, automatically that $2,000 will become unforgivable, because those two transactions that happen between today and tomorrow are the ones that will be looked at it together by the SBA. So the best thing is to put all of that PPP money into another checking account that is strictly and only required to receive that money from the PPP loan. Again, there's no free burger out there. We all know that there's a lot of catch. There's a lot of stuff that we need to be aware of. So if somebody thinks that, I received my PPP and I'm good to go now, so that they are sitting in a dilemma, then the money becomes unforgivable. So that could be a bigger problem. So to answer your question, yes, we have this whole team put together who's going to help them walk through this. But also, we don't control the outcome, right? Whether you will receive the loan or not. However, by working with us, we'll make sure that we give them 3 times the value of what they will pay us. That is a guarantee that can come from us.
That's awesome. So now when you're looking at these loans and then you're looking at, because I know I've talked to several businesses and they're like, well, I'm not going to worry about my taxes. I'll wait on that, till this gets all settled. What would you give advice to those people? Is it something that they should get proactive in now or?
Yeah, there's a lot of planning that will be involved in the business owners who are thinking that I'm not going to do anything about it. Because there are some net operating losses that you can take advantage of as a business owner. So any operating losses that occurred in your business from 2018 to 2020, you are able to go back and redo your taxes, amend your tax returns. You can either go back up to 5 years or 3 years or 2 years. There's planning involved in identifying what are the best 2 years or 3 years that we can take so that you can get some refunds now from the IRS instead of what you paid in the past, right? So just recently I talked to you about a client that benefited from this strategy where they had tax years from 2014 and to 2019. They paid taxes anywhere from $14,000 to $115,000 in all these 6 years that I just gave you.
Right.
However, after applying a strategy called cost segregation, which gets applied to the non-residential properties, we were able to take $425,000 worth of tax losses and apply it to the 3 out of those 6 years that I just mentioned, and they got the refund of $116,000 when they had actually paid $116,000 maximum in the last 6 years. Does it make sense? So
that's awesome because I always tell people this because I'll see so many people mess around with QuickBooks and stuff like that. I mean, I was with a business owner the other day. He had 30-something employees, and I'm like, why are you doing this? You're wasting your time. Your time is way more valuable than this. You need to be working on the business, not in the business. We've all heard that before. So
most definitely.
And then when you're trying to do it and you're doing it, pardon my French, but you're doing it half-ass, then you're going to turn around and, like something like this, this person may have been trying hard and being a good citizen and paying their taxes and stuff like that. And they didn't even understand or know. I mean, this is what you guys get paid to do. This is where you're understanding this. And here, this person got $100,000 back, and that's why I always encourage people. And in the scheme of things, like you said, the amount of money that you can save somebody is way more than what you're going to charge them.
Yeah, and Jason, my philosophy has always been that you can't be good at everything, right?
Yes.
So if you're good at what you do, great, but you need to have solid people in your team so that they can take you to the next level. That's the difference between being a business owner, which is haggling in terms of paying the bills and getting the boat floating, in comparison to an entrepreneur who's working on the business and not in the business, right? So
right.
Effective tax planning, which is legally and ethically saving them tens and thousands of dollars in taxes every year, not just in 1 year, but every year going forward. So imagine what it can do to your wealth. And these are all the strategies in the tax code that most of the business owners are not aware of.
Right.
So in order for them to save a little bit, maybe $1,000 because they want to do the QuickBooks, like your example says, on their own, what are they losing? What is their time worth? So that's what they need to look into.
No, I love that. And finally, you had mentioned this as far as when we were talking earlier before the podcast, like if there's difficult times and a business owner can't, maybe they can't get these loans, or are they just, they're going to retire and they're done and they want to close, they want to be done. What do you have to them?
Oh, excellent question. So most of the business owners, are going through a difficult time at this time. And some of them may still be thinking about that, I'm not going to make it, so it's better I close my doors and go on unemployment, right? So that is the thought that comes to people's heads. But one thing that they need to be aware of is when they close their doors, there has to be a very set legal process that they need to follow, because as we know, the way the economy is going, there may be more lawsuits coming in. That's the prediction, because people are frustrated, they're mad, and they'll find a way to sue you. So what are you going to do when you close your doors? It's not that you close your doors and all the liabilities or responsibilities that you had will go away on its own. No, they are going to come after your personal assets. Even if you have an LLC, even if you have an S Corp. So think through it, because most of the business owners, they think, I have an LLC. The state statute says that I need to maintain the minimum requirements of having one meeting a year, or not even that a lot of times. But because it's an LLC, it's only going to attack my business assets, and my personal assets are protected. No, the court and the third-party lawyers, the first thing they're going to ask you are your corporate meeting minutes book.
Right.
And that book is where, whether you're an LLC or filing as an S corporation, doesn't matter. So if you have been commingling your funds, which means you're mixing your personal business with personal expenses with your business expenses, the court and the law is going to see as if you're not treating your business as a business, right? So when that happens and you cannot produce your corporate meeting minutes that you should be maintaining, what's going to happen is they will automatically win. They will come after your personal assets. They will seize your Rolex, your car, your house, whatever little that you have. And that is a huge risk to take. And with the way economy is going, the anticipation is that the losses will go up. So you need to make sure that you are well covered before you close your doors, so that nobody can come after your personal assets. So we can definitely talk more if anybody makes an appointment with us. And our consultations are free. The first consultation is free. So, make an appointment on our website, and we'll definitely talk about the details of the different credits out there for the stimulus package or the CARES Act that have been issued out. What are the tax planning options? You need to go back and amend your taxes. And lastly, how can you apply for these PPP and EIDL loan programs? So a lot of things to talk about, but it will be identified based on person to person and their needs.
Yeah, I love that, Sandy. And what's the best way? Like, what's your web address and your Facebook?
So they can go on our website. It's www.jindalcpa.com. Jindal is my last name. It's JIND as David, AL as Larry. JindalCPA.com. Or they can go to our Facebook page and send us a message there. And I will also be posting a presentation, a slide deck, and some notes on my Facebook page. Go ahead and like the page and follow it so that you can keep getting updates on the strategies, not only for tax planning, but also what's going on right now. And the Facebook page is Jindal CPA Firm.
Yeah,
Again, my last name, Jindal CPA Firm.
Yeah, I love that because like I said earlier, with everything going on, not just these loans, but then taxes and then protecting yourself legally, to be able to have somebody that's in your court and a team of people that can help you with that, it's just another thing that you can take off your plate to be able to relax, and then having that clarity and focus to be able to work on what's most important to you. And that is, growing your business. And I've always seen that if you have a good accountant, a good CPA, they will always do you right in the sense of protecting you, number one. And then number two, the ROI is always good. So I encourage everybody to get a hold of you. And once again, I want to make sure everybody gets this so they can write it down. Your last name is Jindal. So it's JindalCPA.com.
Yes, that is correct, Jason.
Well, perfect. Do you have anything else before we close out, Sandhya? I want to thank you for coming on and bringing some clarity today.
No, thanks for having me, Jason. I believe that you covered it all. I couldn't agree more. Again, think about how you can increase your wealth, and the only person that can help you would be your accountant. And this is a great time to go and hire somebody who will be an asset to your team and guide you and direct you through the process of not only COVID-19, but how to grow your business in the future. So tax planning and CFO services are the two things that we specifically look at. If they have any questions, I would be happy to talk to them. And all the appointments are set up virtually. They will receive a link to join the call, the video call, and then we can have a conversation.
Awesome. Well, thank you, Sandhya. I appreciate it. And I hope you and your family are staying safe and you have a great day.
Thank you. You too, Jason. Bye-bye.
Thank you for joining us on the Albuquerque Business Podcast. And thanks to our sponsor, RigbyDigital.com. Make sure to subscribe and share, and go to abqpodcast.com. Get show notes, resources, and links to everything we talked about today to help you navigate your journey as an entrepreneur and business owner.